Welcome to Explain the Charts. Today, May 26, 2025, we're diving deep into Ethereum, ETHUSD, analyzing both the latest news and detailed chart data. Recent news suggests a bullish surge, with Ethereum breaking past $2,550 and aiming for $2,800, fueled by ETF inflows and strong demand. However, rising transaction fees and competition pose challenges. Let's start with the daily chart. Looking at the longer-term picture, we can see significant price fluctuations throughout the past year. Notice the surge in late March and early April of 2024, followed by a steep correction. Since then, ETH has been trying to establish a clear trend. We're seeing bullish momentum right now, according to news sources, so it makes sense to look at more recent data. So let's look at the last 3 months. Now let's zoom into the 1-hour chart to get a better grasp of what's happening today. The most recent candles show a strong uptrend, supporting the bullish news reports. However, the volume appears to be decreasing, which could signal a potential reversal. To get a finer-grained view, let's look at the 15-minute chart. We can see some consolidation around the $2,550 level, which aligns with the news mentioning it as a recent resistance point that was broken. If ETH holds above this level, it could indeed target the $2,800 mark, but a break below might signal a short-term bearish reversal. Zooming out on the one-day chart, we see it tested $3,800 and failed multiple times, forming a triple top pattern which may suggest a possible major correction if it fails to break $3,800 soon. The Pectra upgrade being released on May 7th does not seem to have been a major contributing factor if this is the case. In summary, ETHUSD currently shows bullish momentum supported by recent news and ETF inflows, but challenges and chart patterns present potential risks. Watch closely for a continuation above $2,550, targeting $2,800, while being prepared for a potential pullback if support fails. Keep an eye on transaction fees and competitor activity, as noted in our news review.